All right, this is the stock market. We're going to look at the S&P 500 and the Dow Jones Transportation Index. It's an intermediate view. We're going to look at 1 to 3 months. If you want to see the shorter term analysis, which lots of people want to see, of course, you can just get that from our daily stock index report. Matt puts that out every day. You can get that for $10. So if you're brand new, if you're not a askSlim member or you're a free member and you want to upgrade, you'll be able to get that short-term view and our full analysis on the stock market for $10. So please do take advantage of that. All right, so let's switch over and look at the charts in here. Let's take a look. We'll remove this dollar comparison. If you want to see that, watch the beginning of the show. This is the S&P 500, SPY. Of course, this big rally that you see right in here was the period of the massive bubble that was created by the Fed. And this is the beginning of what we think is the reset in there. These, if you're brand new, are cycle brackets. And what these are just a guide. They're a drawing tool and help us understand the rhythm in the market. It essentially is the heartbeat or the money flows that are in the market and the areas where those yellow ovals are, and you can see them on the bottom, also is where the greatest risk is to the downside. And you could see in these up trends, these risky periods don't give you a lot. You get higher highs and higher bottoms. But then when you get a negative cycle like this, it sets up more negative cycles that you see right in here. So this decline in here took you down in the S&P 500 to roughly 361. Down in there, that level right over there, 362, close to that. And then we had a good rally. Let's take a closer look right in here and you can see where we are. So again, we're in this period of risk where this yellow oval is right over here, telling you the highest probability is that the market will move to the downside. And you see that happening right now. Also, I want you to see that the right in here is the reversal scout. And when it peaks, like you see right in here, usually it moves down through the low of the cycle. This was the minor cycle. Here's where it turned up, told you that the market was going to move up. And here's where it turned down here, setting up what was this decline. Now, we had anticipated through our intermediate and short-term analysis that the stock market would be weak through September. The big decline you see right on here, which is about 5% on the week, is not likely the end of this drop. Now, we talked about it getting down to 388, which would be our minimum objective in a more positive condition than we thought we were in. Here's 377 right over here, which is a very likely target. And to really satisfy these cyclical conditions, it really needs to take out this low. Now, the actual low price right there was 362. So that is a pretty good target over these next few weeks. We're going to be looking for a potential false little rally in here for a few days and maybe some kind of a rebound. But then after that, more to the downside. There's also a possibility in here that this moves down towards this trough, this major 50% level right over here. And if it did that, it would probably push out into October if that happened, and that's down at about 350. In either case, what we expect is that this decline would come maybe down to 377 or 362, and then get this period out over here where we talked about in the beginning of the show that we have a more favorable Q4 setting up. Again, this being another rebound or false period of rally in what we believe is going to be an extended bear market out into 2023. So again, this is a very weak period. There may be a little rebound in here, but we think it's going to keep declining. 377, 362, and 350 are the numbers that we're looking at on the downside. And that should finish it up for this year as far as the lows for the year. Then comes the rebound, and we'll see where that comes from and the kind of intensity that it can get on the upside. It's not going to get support, excuse me, from the Fed. That is very, very sure. All you're going to get is people thinking that they're anticipating a peak in inflation, that the Fed is some time going to stall. And as I said in the beginning of the show, when that happens, we're going to look for a big, big upside move in commodities and that commodity move will signal more inflation and keep the Fed tight, and will very much limit upside to the stock market as we get into late into this fourth quarter and into the beginning of the year, where we think there is a lot more risk. Let's take a look right now at the Dow Jones Transportation Average. I'm going to put up $DJT on this platform. And this is just amazing. So you can see that big rally that occurred in there. In this case, I have two different ovals. When a rising phase begins, we have the green oval right in there, as you can see. And in a declining phase, you have the yellow oval, and that's where you get these declines, where these the energies are corrective in here, as you can see here and here and here. Note what it did in here, and it made this beautiful head and shoulders top in the Dow Jones Transportation Average. And the reason that you get head and shoulders tops are because you have an uptrend, then it makes a left shoulder, and then it makes a head. But what happens is that it gives a lot of it up. And then when the right shoulder is formed, you get a rising phase in the cycle that aborts very early, and it sets up a decline like this. That's what the head and shoulders are made of. Head and shoulders are just not, these patterns that come out of nowhere. They're made by the cycles, by the energetics. You can learn about cycle analysis at askSlim.com. Just go to the tab for Cycle Workshop, and there's a ton of information there. So here we are again in this declining phase right over there, and that is suggestive of the fact that the stock market still has more to go on the downside. I don't think the Dow Jones Transportation will make that way down over there where you see the head and shoulders measurement over here. It's probably early next year when it's going to get down there close to 10,000 on the downside. But right now in this period over here, which again bottoms somewhere late September, early October, we're likely to see further declines here in the transportation average. What happened to FedEx, which broke the market here on Friday and sent other stocks down that are affected by the economic slowing, that's not going to end right now. There is more time to go in here, maybe a lot more time to go, and this is just a horrible pattern looking at the Dow Jones Transportation Average, and suggestive of the fact you can see how this is where that low came in June, and the stock market hasn't gotten down there yet, but the transportation average did take it out, and it's very likely that the stock market's going to take out that June low also, and it's a reasonable target down over here at just under 11,000 that it gets there in the next few weeks. So a lot of pressure likely to still come from the Dow Jones Transportation Average, and overall this picture I gave in the stock market really says that there will be a few weeks in here, 2-3 weeks of potential, a lot of downside still, and then you will get into this Q4 period where the market is likely to get some traction and be able to hold in there and not make lower lows and make some upside gains, all within a big bear market. I want you to see the full analysis if you want to see the short-term analysis on all of the indexes. And so many people will write to me and say, well, you only showed the weekly chart. Where's the daily charts? And of course, our members all get that. And if you become a level 1 member for $10, you can actually get that also. So all you have to do is sign up. You'll get all of this information. And here, click the Learn More button up at the top of the page at askSlim.com, and all the information will be there about everything you get for 1 month for $10. That's 50% off, and you'll get our daily stock index report that Matt does a phenomenal job in.